Hi, my name is Joseph. Welcome back to my channel. A lot of people predicted a housing market crash last year, but instead, we experienced a boom. Have you ever wondered how the housing market actually works? In this video, I'll share with you what factors drive the housing market and how each factor has played out recently. Before we move on to today's video, please smash the like and subscribe buttons. There is a lot of information in this video. I suggest you watch it a couple of times. This should make you a more informed consumer and a better investor. Let's get started. Let's talk about the basic economics of supply and demand. Did I lose you there? Stay with me, it gets a lot better. Any seasoned investor would know that one of the most important factors to watch is housing supply. That is how many homes are in the market and how many new homes are built each year. When you flood the market with too many homes, they become broadly available, and that drives prices down. When you underbuild homes for an extended period, home becomes a scarce resource, and that drives prices up. Well, that is what happened in the United States for the last 10 plus years. From late 1960s to 2007, we had built 1.8 million homes on average each year. But since the 2008 housing crisis, we have built 0.9 million homes on average each year. That's half of what we used to build each year. Forget how homes now are bigger than the past, and forget how population growth slowed down. When we build half of what we used to build, and do that for a decade, you're going to run into some serious issues with housing supply. We call this a housing shortage, a severe housing shortage. It is estimated that 2.5 million additional housing units will be needed to make up this shortage. This shortage in housing will take years to fill. That means home prices will continue to be supported by lack of supply for a number of years. What's even worse is that developers have opted for big and expensive single-family homes and luxury apartments. Lower-priced homes are nowhere to be seen. This exacerbated the housing shortage for people looking to buy their first homes or people who need smaller homes. The good news is that home building is back to somewhat normal levels. If you look at housing construction, we're building twice as much as the bottom in 2009, and back to levels last seen in the early 1990s. While it might take a few years to catch up on building enough homes, I am optimistic that continued recovery will bring the housing supply and the housing stock to a robust level. Now zooming to near-term trends. Despite an economic crisis, home price skyrocketed in 2020, with some markets seeing 10 to 20% appreciation. The reason is extremely low housing inventory. Take a look at the graph that shows the supply of houses measured in months. That is how long it will take to sell all the homes listed on the market at current rate of sales. We are at 4 months of supply currently, relative to over 10 months of supply at the height of prior crisis. That means there are few homes listed for sale relative to the large amount of sales every month. That is a seller's market. All of these means that supply has been weak. We haven't built enough homes in the last decade, and we're playing catch-up in home construction currently. We have been in a housing shortage. There is very little inventory currently on the market. We have too few homes and too many buyers. Speaking of buyers, let's now talk about demand. We have a growing population. That means new demand for more homes. Over the next decade, the United States will add about 20 million new households, and they will need a place to live. On top of that, we need 0.3 million units per year to replace old homes. We also need some vacant homes to increase liquidity in the market, enable prospective buyers to find a match. Between new household formation, replacing old homes, and some vacancy demands, we need 1.6 million homes every year. If you remember the chart of new US housing supply in recent years, the demand of 1.6 million far exceeds the supply of 0.9 million, and that has been a chronic issue. Now zooming into near-term housing demand, we're still in an economic shock, so demand will be muted until the economy fully recovers. However, because of low mortgage interest rates, buyers can afford to buy more and bigger homes. That artificially increases demand as long as interest rates remain low. Weak fundamental demand due to economic shock and strong artificial demand due to low interest rates offset each other in various degrees, depending on which city you live in and each person's ability to borrow. But when you factor the long-term and the near-term trends in demand, we're seeing continued healthy demand for homes. When you blend supply and demand together, You will find unique sets of housing activities. Let's take recent economic cycles, for example. During the height of the housing boom in 2005 and 6, you have construction, blue line, exceeding sales, red line. That is the result of continued rising of home prices in prior decades, attracting new and speculative buyers who bought second and third homes without good credit because lenders are just giving out loans loosely. And construction, that is supply, ramped up quickly to meet that demand. When market can't absorb more homes and the bad loans go sour, demand and sales really dropped. Subsequently, the supply and construction followed. That created an inventory overhang, then followed by a long period with depressed construction and sales because builders, homeowners, banks, and investors had all been burnt. This lasted for years until we eventually worked through the excess inventory as the economy slowly recovered. This is the classic boom-bust cycle in the housing market, especially the 2008 housing crisis, where magnitude was much bigger. Fast forward to the spring of 2020, housing construction came to a halt as the shock of the coronavirus and lockdowns disrupted all facets of the economy. You see the blue line dipped. At the same time, people are working from home more, and mortgage interest rates dropped to historical lows, supporting demand and sales as soon as some activities returned in the early summer. There you go again, strong demand amidst weak supply, and lack of inventories turned into a strong seller's market with soaring prices. Multiple offers and cash offers became the norm in some hot markets. What does that mean for the average individual? I had a lunch with some lawyer friends in 2019, and we talked about how unaffordable homes were then. One friend commented, "When you see lawyers having a hard time finding affordable homes, you know home prices are too high." Despite skeptics predicting a crashing housing market in 2020, home prices are still high, well, even higher. A lot of average people are simply priced out of the market. There are a few other home-related facts. Home ownership rate is recovering from the lows a few years ago. Building sentiment is very strong. Delinquency rates are improving. Financing activities are healthy. So that is why we had a housing market boom last year. A chronic shortage of housing and cyclically tight inventory, coupled with continued buyers' demand and the boost from low interest rates, have created robust sales and soaring home prices despite short-term disruptions from the coronavirus and lockdowns. Now, having understood how the housing market works, you should check out my 2021 housing market outlook. Thank you for watching. If you find any value in this video, please click the like button and subscribe to my channel. I'll try to provide as much valuable information as I can.